Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil.
Paris rapeseed. Now 4 weeks ago, prices drove higher to highs not seen since July last year, with a gapping move higher since filled in. However, this drive upwards did not reach its full potential and instead turned back low with a very unusual pattern. You see, what we had was a topping action, but with a handle on it. Going into this pattern formed since April. Normally, I would expect to see a handle on a V top or a V bottom, usually after the top itself had formed. But this time, it was before. They sometimes happen before, but these are rare, and this is such a case of an early handle, except it's not really a V top, so altogether a quite rare pattern. Anyway, 3 weeks ago, prices dropped down through the purple neckline of the June to October 2023 head and shoulders top, currently at 490.25, only to hesitate the next support below, the rising green highlighted short medium moving average, currently at 477.25, which wasn't that great a support or resistance prior to this move, and just ahead of the June 2021 low at 468.75 and the 2013 high at 464.25, and neither of these two looked that great either. The 2013 high at 464.25 managed to hold up the market, enough that last week we not only saw gaps being filled, but a move up to test the green highlighted short medium moving average. All the very recent action allowed me to draw a small 3-week-old bearish expanding wedge pattern, currently 460 to 474.25. I had not highlighted, or have not highlighted even now, this pattern as it's nascent and quite small, but I did seem to be doing the job until yesterday and today. Yesterday we had a bullish above the stomach pattern that broke up through and closed over the upper wedge trend line and the green highlighted short medium moving average. Today prices have utilized the green short medium moving average as a base for a move higher towards the purple neckline. Remember that one, the purple neckline currently at 490.25 and a congestion at 491.75. This is the next likely opposition to this move higher, so please bear that in mind. Just as an aside, in these 2 days, yesterday and today, the market has already reached the primary and secondary targets for the nascent descending wedge pattern. And we are also not on for a weekly key reversal. So this is a pattern on its own, a move up on its own. Winnipeg canola. The halt to the decline from last year ended as a nice, neat horn bottom just ahead of the December 2020 low at 567 even back in February this year. Since then, prices moved higher, but saw the rise eroded during the first wave, especially by the mauve highlighted medium moving average, currently 634.70, and the June 2021 low at 655.90, such that the market halted and rebuffed trying higher for a long while, especially the testing of the next overhead resistance as the dark blue highlighted neckline, currently at 636.90, of the April to June 2023 reverse head and shoulders continuation pattern. However, in the last days of May, the market moved up, breaking through the dark blue neckline, then the June 2021 low, and most recently the descending long moving average, currently at 658.20. By doing so, it set up the opportunity for two features. The first was to look at the whole of the action from the horn bottom in February to date as a bullish halfway hesitation. And secondly, as I mentioned 4 weeks ago, we're all set up with still a week to go for this month of May to be a monthly key reversal, which it eventually did become. Without doubt, both of these features failed to impress the market. And we've seen a fall since the start of June, down through the long moving average, below the short medium moving average, which is currently at 648.70, and below the dark blue neckline, as well as the mauve highlighted medium moving average, that's currently 634.70. And even both the 2021 low at 629.5 and the May 2023 low at 611.10. However, as I said 3 weeks ago, and I quote, I suspect we may see stronger support emerge down at the May 2023 low at 611.10, but we shall see, end of quote. Well, we have seen such stronger support emerge, with yesterday becoming a combined key reversal up and bullish engulfing pattern that's continued higher today. Let's first take a step back for a bit before I look at this week's actions. So 4 weeks ago, I drew a mid-February to early May bullish Andrews pitch hook, and I said at the time, and I quote, I like this bullish Andrews pitch hook as it shows the bullish angle attack of the market quite well, but I'm not in love with it, and I would retire it or replace it with a bullish shift pitch hook if I thought they would be a better fit, end of quote. Well, 2 weeks ago, I decided to finesse this bullish Andrews into a shallower bullish shift pitch hook, as it seemed an even better fit. However, this was not to be, and 2 weeks ago at the end of that week, prices punched down through the purple lower time, currently at 644.90. The move lower created a small nascent unhighlighted bear channel, currently 592.10 to 620 even. But yesterday the market showed its distaste at being below the May 2023 low at 611.10 and created a combined key reversal up and bullish engulfing pattern. And today, well, today the market has punched up and out of this nascent bear channel. Such a move higher would have a primary target X in the 639.40 area, with a harder, much harder to reach target X1 in the 662.20 area. And the reason it would be harder, all of them, both of them are, is there is a whole load of congestion overhead that might be hard to fully tackle. And it's between roughly 634.70 to 658.20. And it consists of, deep breath, the 2021 low, the mauve highlighted medium moving average, the dark blue highlighted neckline, the broken purple highlighted lower time, the short medium moving average, the June 2021 low, and finally the long moving average. So there's quite a band of congestion overhead, so caution. Bursa Malaysia crude palm oil. It has been months, many months indeed, since we had the key break higher over the upper time, currently at 38.32 of the August to November 2022 bearish shift pitch hook. Yet I've still kept this pitch hook, still on my daily chart, and even started highlighting it in purple. Why have I done these things? Well, my reasoning became evident during May as the market hesitated and apparently started building a base on this very thoroughly broken upper time, helped by the 50% Fibonacci line of the May 23 to April 2024 move at 38.75, as well as the gold highlighted and flatlining long moving average, currently 38.85, plus the bright red highlighted May 2023 to date uptrend, currently at 39.01. So after the moves higher in March, we had the decline in April and during May. During May, we have had the start of what looks like a bottoming action, or maybe even a sideways action. It's only becoming evident now, especially with April being a monthly key reversal down, but it does have some significant elements. So what now? Well, 14 weeks ago, I gave my thoughts on what was going on, and I quote, so what now? Well, for this, I went to my standby on such occasions, the longer term monthly charts, and there was one clear standout level that needed to be watched, and that was the November 2022 high at 44.08. This is a key level on the top side, because if it is broken and properly broken, then there are significant potentials top side. Similarly, if it holds in that area, then there are significant potentials on the downside. So watch to see if prices reach up to the 44.08 area, and then what prices do at that level, end of quote. I can think of no better way than to still monitor what the market does should we get up there to that 44.08 level. We have been up there before in early April, but there have been no longer term closes up there, and by that I mean monthly closes, none over it, not yet. It is quite a mouthful, but looking above, we have some resistances which the accumulation of action over late April to date, especially with the support of the gold highlighted long moving average, the bright red uptrend, the 50% Fibonacci line at 38.75, and even the decline in purple upper time could provide sufficient ammunition to have a useful try at tackling the top side. Prices just need to overcome the following. The green highlighted short medium moving average currently 39.62. The mauve highlighted medium moving average currently 40.25. The dark blue neckline currently at 41.27 of the September to November 2023 reverse head and shoulders bottom. The July 2023 high at 41.89 and the twin 38.2% Fibonacci lines of the July 2019 to March 22 move at 42.39 and the May 2020 to March 22 move at 42.74. With the neckline of the September 2015 to November 2017 head and shoulders top, that's currently at 42.85 nearby. So quite a mouthful in the way topside, and quite a bit to be looking forward to if prices do rise. And this is where we come to the very recent action of gapping moves since filled in, and the new feature of a green highlighted neckline currently at 39.54 of the late April, late May reverse head and shoulders pattern. Now prices have already reached the primary target topside, thus leaving just the secondary target X up in the 41.20 area. Yet all this does not take away from what are the two essential questions of this market. The first one deals with where we are now, and that is in essence between the bright red uptrend below and the dark blue neckline above. We are still where we were at the end of April, in effect caught between these two trend lines. The second question is which way next? The answer? Well, the answer is still not clear, but I would note the slightly bullish rise in both the uptrend below and also the above neckline. Next is the action. Since the beginning of April, especially since mid-April today, does this action look like a bearish halfway hesitation? Or a reverse head and shoulders pattern? Or maybe it combined to look like a rounded bottom? On this, well, the situation is still early, but right now I'm minded to look at it as a rounded bottom type pattern that is moving out of this pattern into another sideways based pattern, maybe a rectangle of sorts. I can only add what I said last week, and this is it, and I quote, it will very much depend on what the market does once the green highlighted short medium moving average drops into market, which may happen as soon as next week. So that may be as soon as this week or early to middle next week. Watch this space.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.